All right, we're live. So we are going to spend the next hour talking about how to become a military millionaire. And this is specific to using your VA one-time close custom construction loan. We're going to add in some of our moderators who are people on our team. We've got the VA loan gals who are loan officers and loan officer assistants on my team, and they are originating all across the country. They are going to answer questions as we go through this information so that you guys can ask questions. So as you're coming up with your questions, go ahead and put them in the comments. We will get you answers as we go, as well as on YouTube. If you have questions on YouTube, we've got people moderating YouTube as well. So we're going to get you guys as much information as we can about your VA loan with regards to buying land and building using the VA home loan benefit, okay? So we're also going to post in the comments throughout the whole session. We're going to post in the states that we are currently licensed in. So we have applied for licenses in all 50 states, just to clarify. But we recently transitioned from a previous mortgage company that we were a DBA, so doing business as we were DBA of that mortgage company. We have recently transitioned and we created our own company. We went independent. We started our own company. And so we are our own mortgage company. 65% of our staff are prior service or spouses. And we have been specializing in the VA home loan benefit for, oh gosh, it's really 20 years now. So we're here to educate you guys about the VA home loan, specifically with the one-time close. The one-time close is a custom construction loan program. A lot of lenders and investors and banks and mortgage companies don't have access to this program. So we have begun to originate this program about a year ago. We started originating VA one-time close custom construction loans, and you can crawl by. We have a piece of paper on the window that's flapping with the fan. So this program is not necessarily global because not everybody has access, or I guess I should say nationwide. Not all banks have access to this program. And that's why you might go to a local bank to talk to them about getting financing for buying land and building a home. And they might not even offer you the VA one-time close because they don't actually have access to the program. And oftentimes they've never even heard that this program exists. So this is something that we hear about all the time. And so, unfortunately, there's just not everybody knows about it. So starting with the VA one-time close, let's kind of go through the basics. Basics are you have to have a minimum of a 620 credit score to qualify for this program. Now, our regular VA loans, you don't have to have a minimum credit score. Regular VA loans, just going and finding a house that's already built, or a builder's building a house in a neighborhood, which is different than the one-time close. You don't have to get one-time close financing when a builder is building a house in a neighborhood because the builder is financing the project. So if you're trying to figure out what the difference is between you having to finance the project or a builder financing the project, that's the first question to start with is builder, Mr. Builder or Mrs. Builder, are you funding and financing the construction of this home? If the builder is financing the construction of that home, you do not need to get a one-time close custom construction loan. All you need to do is get pre-approved or approved for a regular VA loan, and you'll do takeout financing on that VA loan. You'll cash out the builder once the house is completed. The VA one-time close is totally different because the builder is not financing that construction. You are financing the construction as the buyer. So with regards to a regular VA loan, or if the builder is financing the construction and you want to use the VA loan to buy a house that's already done, then you don't have to have a minimum credit score of 620. But if you're looking to buy land, find a builder, and build a custom built house, that's where you need to have that 620 minimum score. You can go up to $4 million on total acquisition. Now, what we consider total acquisition is the land. We consider total acquisition, okay, somebody's asked me to join their live, and I know I did this one time before and it didn't go well, so I'm not going to do that. So the total acquisition is the land cost, acquisition, what rolls into acquisition. You can also put the improvements to the land. So if you need to connect to utilities, if you need to drill a well, or if you need to add septic, connect to sewer, if you need to do a wetland study, things like that can be included in your total acquisition cost, your total financed amount. You can also include architectural fees. You can be reimbursed for those, or engineering fees. You can be reimbursed for those. So you may have to pay those things up front because we do need plans before we order the appraisal, before we close on the construction loan. So we're going to get into that in just a minute. So 620 minimum credit score, up to $4 million, zero down. That is insane to find a custom construction loan program that will fund up to $4 million, zero down. Now, of course, you still have to income and credit qualify, okay? So credit qualify means that you have over a 620 credit score, and we need to get an automated underwriting approval, okay? So this program does require an automated underwriting approval. And what that means is we take your loan application, we get your documents. So we're going to run a pre-approval for this VA one-time close custom construction loan, like we would run a VA loan approval for a regular VA home loan purchase when we're pre-approving you to go purchase a home. So we're going to collect your W-2s for the most recent 2 years. We're going to collect your most recent LES statement. We're going to collect your most recent bank statement, potentially your orders if you are transitioning or you're PCSing. If you're transitioning, we need an offer letter from your permanent employer or proof of your retirement pay. If you have disability pay, VA disability pay, we would need that documentation. So it's not super complicated, but you'd go online, you'd fill out our online loan application. Our online loan application takes 10 to 15 minutes to complete. You complete the application. We get pinged immediately upon you completing the application. You are allowed and able to upload your documentation directly into your file online. So our team has that information, and as soon as we get it, we go to work on it. We do sleep a little bit, but we work oftentimes 7 days a week. And, usually we're going to respond to you if we're awake. So if we don't respond, we're probably sleeping, but we'll get back to you soon. So you're going to go online, you're going to complete the online loan application. You're going to upload your documents. Once you've done those two things, we start working on our credit review. We're going to do our credit review. We're going to do our income review. We're going to come back to you if we have any questions. And then we're going to come back to you with a pre-approved limit, a ceiling limit. We're going to say, okay, you're pre-approved up to this amount based on your income. And then you can kind of reverse engineer your project and work backwards from there. So let's say we pre-approve you for $650,000. Now you need to go start taking a look at land. So that's the next step. You get pre-approved as first step. Step number 2 is you start getting an idea of how much does land cost. Now, we don't want you to actually make an offer on the land yet at this point because we need to find your builder and we need to know what floor plan you're building before you find land and get under contract. Now, if you own the land already, that's a different situation. A lot of people have bought land. I've been really surprised how much of our military community and veteran community already owns land, which is amazing. Great job for you guys. Super happy to see it. But there's a lot of opportunity to build out on the land that you already own. If you don't already own the land and you need to go find land, then the first thing you want to do is start just exploring. Where do I want to live? How much are lots? If you're looking for acreage, how much is acreage in the area that you're wanting to buy? So obviously you need a real estate agent for this, right? That's the best way to do it. Now, real estate agents, when you're buying, the commission for a realtor is not paid by you. And on VA loans, to be honest, you're not allowed to pay real estate commission anyways. The seller has to pay real estate commission on a VA purchase transaction because the VA does not allow a veteran buyer or anyone using the VA loan, a buyer using the VA loan, to be able to pay your real estate commission. So that's cool. So when you're looking for land, you're going to want to have a real estate agent because they need to help guide you through negotiating a contract. There's also going to be a study period. We call that a due diligence period or a feasibility period where you're under contract on the land. And then you actually are writing this feasibility contingency into your contract so that you can go and do studies to make sure the land is going to allow you to build what you want to build on it. So sometimes you have to check the dirt, the soil, to make sure there's not like hard limestone that you can't drill into. You've got to be able to make sure that it doesn't hold water at a high water table, like in Washington State. Washington State had a lot of wetlands. So you can't build on wetlands because obviously your house would be damaged due to water and water damage and rot. So the county's not going to allow you to build inside the wetlands. There's going to be buffer zones and they're going to force you to build outside of those zones. So there's these due diligence studies that you want to do when you're buying land. So you want to make sure that you have a real estate agent because they're going to write the contract to protect you. They're also going to be able to help negotiate that contract. If you do not have a real estate agent, let us know. We can help you find a real estate agent in any state in this country. What we will do is we will help reach out and we will look for a real estate agent that has experience. We will call them, we will vet them, we will make sure that they understand how to purchase contracts, work on land, how to work with a VA family, a military family using their VA loan. We'll make sure that we do that forward work for you, and we ask them questions as an industry professional to make sure you're being partnered with someone who's going to take care of you. I literally was talking to someone yesterday who called me in a panic because she and her husband were referred by this national mortgage company, Veterans United. They were referred to Veterans United Realty, and the real estate agent did not even show up for the appointment that they had scheduled. They literally got to the house to go look at this house, and the realtor was a no-show. And that to me is absolutely horrific. There should never be a time where a real estate agent doesn't show for their appointment and then doesn't call you and let you know there was some sort of emergency or something that happened and they need to reschedule. So make sure that you reach out to us, because a lot of the problems that we see in real estate transactions that we get pulled into to fix is either lenders or realtors not knowing how the VA home loan program works. So we are here to help you guys with that. We just, honestly, we just want to make sure that we are advocates and we help assist you, making sure that you're working with professionals who are going to take care of you. So you find land and you get an idea of what the land is going to cost. Then the next step, before you write the offer on the land, the next step, and I know this is hard because sometimes when you find land, you're panicked. You don't want somebody else to buy it. You don't want somebody else to get under contract. So in the event you have to get under contract on that land, you're already pre-approved, right? So we pre-approved you. Before you find the builder, if you have to get under contract on land, please ask for an extended loan closing period. So 4 months, 120 days. If you haven't found a builder and you don't know what floor plan you're building, get a 120-day closing on that land contract. If you need to get it under contract because you're afraid you're going to lose that land, then do it that way. If you wait to get the builder and you wait to get the floor plan, you can go with a shorter closing timeline on your land. But I'm telling you, a lot of these things take time. It takes time to get back information from the county or the city, the surveyors, the engineers, the architects, the builders. Those are all the things that can cause you delays in a VA one-time closed custom construction loan because you are starting from the ground up. You're getting the land and you're building the entire project from the ground up. And sometimes those things take a little bit longer than what you expect and what it seems like they should take. So you found land. You have an idea of what the land's worth. Maybe you go under contract with an extended closing date, or you're waiting and you're going to go find your builder now. So let's talk about builders. How do you find a builder? Is there a list of VA approved builders? Yes, there is. You can go to the va.gov website. Do not go to a va.com website because that is not a government organization website. That is someone's personal website, a business's website. You can go to va.gov. And you can Google, or when you get to the page, you can search for approved builders, VA approved builders, and it will give you a list of VA approved builders per state. So depending on what state you're in. Now, this doesn't mean that they're great builders. It just means that they're VA approved. And VA approved builders are just a few forms that they have to fill out. It doesn't mean that we've looked at their financials, the VA. Doesn't mean that the VA has looked at their financials or vetted them to make sure that they've called their references, their credit references, they've called past clients, they've talked to their subcontractors. That is the step that we're going to go through at the bank level to get your builder approved. So if you want to use an already approved VA builder from the VA approved website, that's fine. We're still going to take them the next step and get them approved for your project. If they're not on the VA approved list, that's not an issue because we will help facilitate getting them added to a approved VA list. So either way, we can work with either scenario, but just don't panic if they're not already a VA approved builder. Also, if you need a builder in your local market and you don't know where to start, reach out to us, let us know. We will help do some homework with you. We do have a lot of builders already nationally that we're working with or have worked with. We've got a couple barn dominium companies that we're working with. So you just let us know what we can do to help, and we'll get you connected and do some reaching out if we can, if we need to. So once you find the builder, then we do have to get the builder approved. So, you need to be, this is the process that we have to wait for the builder to respond and return some documents. The builder might have to return their financials. Not all builders are super organized with their financials. They're super organized with the administrative side of their business. So we want to make sure that we set expectations for things to take a little bit longer because we don't want to be upset or disappointed on our end, your end. So we're going to try and give ourselves time for all of those different pieces that need to happen. So you find a builder, you get the documentation back. We will provide the documentation. We will reach out to the builder. We can facilitate all of that so it doesn't have to be you getting in the middle of that. Once we get the builder approved and you have figured out what you're building with the builder, we're not going to work on that. That's your job. Once you figured out what floor plans you're going to build, whether you're hiring an architect and the architect is designing your floor plans, or you are buying plans that are online already. If you buy plans that are online already, just a quick tip, those do have to be looked at by a local architect or a local engineer to make sure they meet local code. Or a builder. A builder might be able to tell you whether they meet local code. So you want to make sure you meet local code, because otherwise you submit those plans to the county is not going to approve those plans, and now you've waited however long it takes to wait for the county to pick up your package to approve your plans and issue your permits. So we want to make sure ahead of time. And this is kind of cool. I have bought land. I'm actually in the process of working with an architect to finalize plans for myself. So I'm going to guide you guys through my process, my personal experience of doing this. I have already gotten the survey on the land. I had to have a tree survey done on my property, even though the property that I bought actually had an old home on there. The previous owners knocked the home down and wiped it out. So it's vacant land, it's raw land, but there was a home there previously. I got the tree survey because I didn't want to remove all the trees on the property, and I wanted to know what my building envelope was. So I paid an extra few $100s to get a tree survey. So I have my survey, my tree survey. I gave those to my architect. My architect's been working on floor plans for me for the past, honestly, it's been like a year. I'm slow moving. I'm not in a super hurry to build the house. I'm waiting for construction costs to come down. They've come down drastically, but they're still coming down a little bit. So I was just, waiting for that. So, the architectural plans can take a while because you're building, you're spending money on an architectural fee. You want to make sure that you're designing the house exactly the way you want it. And I've gone back and I've made some changes with the architect on my plans. So this is just part of the process. Once you get your plans back, then you can start getting pricing from the builder. The builder's typically not going to give you a price, meaning they're not going to give you a quote on how much it's going to cost until you have the plans back. So you get your architectural plans back, whether you're using, some builders actually have plans that you can just build their plans. And if you have their plans and they've already built that house, that means their framers are familiar, their subcontractors are familiar. If they build it very consistently, they should be able to give you pricing on that house much easier than if it's their first time building that home. Because then they have to go out and they have to figure out what's the lumber cost, what's the sheetrock cost, what's the cost for the electrical, and they have to get bids back from all their subcontractors, which is another reason why you need some time in this loan closing, because general contractors waiting for subcontractors to provide their, quotes and bids takes a little while. And they're not going to give you a final price until they have a fairly good idea of what everything's going to cost, because that's how builders lose money. So once you have found your land and you have found your builder and you have figured out what you're building, then we can submit all of that for, number one, the appraisal. So now at this point, we can actually order the appraisal. Until that, we cannot order the appraisal. The appraisal is where a VA appraiser goes out to the land, and they're going to take pictures of the land. They're going to take the floor plans that we have provided to them and a spec list. Let's talk about the spec list real quickly. A spec list or a spec sheet is going to be a long sheet that we provide to the appraiser, and this is something that you accomplish with the builder. And this is a list that tells us exactly what you are building into the home. So are you putting travertine floors in the master bathroom? Are you using marble countertops? Are you doing hardy board siding or cedar siding or metal siding? Are you using metal roofing materials? Are you using composition roofing materials? All of those things matter because they are considered and factored into the total cost of the home plus the total appraised value, the future appraised value. So that's what the appraiser is doing. They're coming up with a future appraised value. How much is this house going to be worth when this construction project is 100% completed? So they're going to complete an appraisal prior to us closing on the construction loan. When we close on the construction loan, this is when you're locked in. You're locked into your interest rate for 30 years. You're actually locked into the loan, and that loan you don't have two loans like you do with a lot of construction financing. You have one loan. It's literally one-time closing, and that's why it's called the OTC. So once we have the appraisal back, we've already pre-approved you at this point, right? And so now we're submitting your package into underwriting so we can get your loan underwriting. So we've got your pre-approval package, which is your income documentation and your credit documentation. Then we've got your appraisal package. We're submitting that in so that the underwriter can issue a loan approval for us. It's going to be an initial loan approval, right? Because there's typically 2 loan approvals. You typically have your conditional commitment, initial loan approval, which is also called a conditional commitment. And then you have your final loan approval, which is when you go back in and resubmit any final conditions. And that's typically right before closing. When you close on the construction loan, you are, like I said, we're locking you in to a 30-year fixed or a 15-year fixed term. And this is VA. Interest rates, it's hard to quote interest rates, but they're going to be somewhere in the low 3s. I'm sorry, in the low 7s. Oh, good Lord. There was a point when we were in the low 3s, but for construction loans today, we're in the low 7s. The reason why the rates are a little bit higher on these construction loans than they are on regular purchase transactions, regular VA loans, is because, again, there's additional risk. Not very many lenders are lending the one-time close VA custom construction loan because there's risk. And why is there risk? Because the lender is holding on to the note on the loan until the construction is 100% completed, and then they can actually sell the mortgage. They cannot sell the mortgage until the construction is 100% completed. So there's a higher risk for them because if for some reason your builder doesn't complete the construction, that lender could be left holding this mortgage note on a home that was not completed. So just a heads up, that's how that works. But you are locked in at closing right before the construction loan closes. You also have to qualify right at closing before the construction loan closes. So let's talk about that because I get a lot of questions like, I already have a VA loan. Do I have to sell that home first before I close on this construction loan? So let's talk about that. Again, this is how you can become a military millionaire. And the reason I say military millionaire is because when you invest in real estate, when you look at how people in the United States became wealthy, a large portion of people in the United States became wealthy through real estate investment. They're not making any more land, and the cost to build continues to increase with inflation, with the cost of materials, and cost of labor. It's going to continue to become more expensive. So in the future, I don't see house prices crashing and staying down for any extended period of time. If you look back historically, real estate has been the best long-term investment that you can make. It's the most stable. It's had the best appreciation value, better than the stock market, better than, any other kind of investments. Crypto, if you really lucked out and you got into crypto at a very good time and you got out at a very good time, you're probably, I would have to look at the comparison of that, but real estate is still a very smart investment. So when we talk about becoming a military millionaire, it's because my assets that I own are primarily real estate. The money that I have tied up, the capital that I have tied up is mostly in real estate. And if you leverage it properly and you put your real estate to work for you, that's how you can become a millionaire. That's how you can create passive income. That's how you can create long-term income that comes in that is also non-taxable because it's not W-2 wages and it's not 1099 wages. It's wages that are tied into properties that get write-offs through depreciation and other things that allow you to become very low on your tax requirements. So there's a lot of different ways that you can do that. And I'm not a tax accountant and I'm not an attorney, just full disclosure. But yes, real estate is a very good long-term investment. With the military millionaire concept also, with this VA one-time close, you can build a multi-unit property. And when you're building multi-unit, you are building something that's going to cash flow long-term. So it's really smart to be looking at this particular program as a multifamily. I have 2 sons that are in their early 20s, and I'm telling them right now, they're actually getting ready to work on multifamily, either new builds or multifamily existing, because there's no better investment that you can get into when you're in your 20s than in multifamily, or 20s, 30s, 40s. Honestly, I'm looking to do multifamily right now as well. And I'm in my early 40s, almost mid 40s. So military millionaires, this is a really great way to invest. So once you have, going back to our scenarios, once you know that you're going to close and you've gotten pre-approved, and now you got to figure out, what am I doing with my existing home? If I have a VA loan right now on an existing home, you have a couple different options, actually 3, I think. The first option is you sell your home prior to your construction loan closing. Why would you do this? Well, first scenario, you would do it if you need to sell your home in order to qualify for the new mortgage, okay? So if you don't qualify for both mortgage payments at the same time, you need to sell your home. Or you turn your home into a rental property, but you have to move out of it prior to closing on your construction loan, because we need to be able to verify that you've actually converted it from your primary residence into a rental property. This is called a departure residence. When you're converting it into a departure residence, then we can offset that mortgage payment with the rent that you're getting in. So if you're getting $1,700 a month in rent and your mortgage payment is $1,500 a month, we can only account for $1,500 a month and do a basic offset of your mortgage payment at $1,500. We can't use that extra $200 a month as positive rental income. We can only offset the mortgage. If your rent is $1,000 and your mortgage payment is $1,500, then we can only use $1,000 to offset that $1,500. But it does help with qualifying if you need to use that income to qualify. So you can sell your house, you can turn it into a rental property. Both of these things have to happen before we close on the construction loan. And that means before we start building. Okay, so remember, closing on the construction loan happens before the building starts. The other third option is you could refinance your current mortgage into a conventional, you could refinance your VA loan into a conventional loan and do what we call a one-time restoration. The one-time restoration is literally that. You can only use it one time in the history of using your VA loan. So we got to make sure that we time that properly and it makes sense to do that. For a lot of our military families, they have multiple military, dual military. So they both earn their VA home loan benefit. So sometimes you don't have to sell the house. You don't have to rent it out because you have enough entitlement with the other spouse who hasn't used their VA loan or who has VA loan entitlement left. Keep in mind, you can have more than one VA loan at a time. You can reuse your VA loan 0 down if you've already used your VA loan before. You can reuse your VA loan again if you've had a foreclosure on a VA loan. You can reuse your VA loan again if you've had a bankruptcy on a VA loan or a short sale. It all boils down to how much entitlement was charged on that first VA loan that you had. So if there's a loss on your VA loan from a short sale, foreclosure, or bankruptcy, we would see that on your certificate of eligibility that we pull from the VA. And that will tell us how to calculate what you have left over. I'm going to give you a super quick, simple calculation. This is not a finite calculation. This is just a broad calculation to determine how much VA loan entitlement you have left or how much house you can buy. So currently, in most counties in the country, our VA loan limit is currently $726,200. So if you bought a $300,000 house, it's going to go off of, calculator. Thank you, Haley. I'm making this so simple. I don't need a calculator, which is rare. So if you bought a $300,000 house, the VA entitlement is charged off of how much you purchased the house for. So if you did a refinance later on, an IRRL, interest rate reduction refinance loan, we can't go off of that lower balance. We have to go off of the $300,000 because that's what the VA charged your entitlement as. The only time that would change is if you did a cash out refinance and your VA entitlement amount changed. So if we're in a county where the VA county loan limit is $726,200 and you have a $300,000 VA loan outstanding that you bought, $300,000 purchase, then you have roughly $426,200 left over, 0 down, okay? So if you're in a county where the county loan limits are higher, like some counties in Virginia, some counties in Washington State, Pierce County, King County, Snohomish County, Hawaii, California. There's some places like Teton County in Idaho. I don't know why I remember that one. I think it's because I taught a class there one time and I just remember the name because it is close to Jackson. So, and the Tetons, obviously. That county loan limit is higher. So if you're in a market where the county loan limit is higher, then you go off of the higher county loan limit. Now, with the Blue Water Navy bill, if you are not currently using your VA loan, you do not have a county cap, which means you could go to $4 million, 0 down, if you do not have a VA loan and you credit and income qualify for that $4 million loan, okay? A lot of people go, $4 million, like, yeah, show me the veteran that can buy a $4 million house. And we have them. There's a lot of military that have been very successful post-military career, or maybe they have a successful spouse and they're active, and that spouse brings in a ton of income. We've had a lot of people that purchased over $1 million, over $2 million, and we've had a handful that have purchased over $3 million. We get a lot of you guys down in Southern California and Virginia and some of our higher cost markets that want to do a multi-family, so 4-unit. Anything multifamily is anything from 2 to 4 units. You cannot finance over 4 units with the VA loan or any other loan program like conventional FHA, USDA, or VA. You cannot go over 4 units because that's considered commercial lending. So residential goes 2 to 4 units for multifamily, but you can buy a 4-plex. And if you watch my TikTok, you'll see I did a San Antonio scenario of, I believe it was a duplex. I think I did a 4-plex one in a different market, but I'm planning on doing more. And it shows you how much rental income you could get on those other units. So you have to own or occupy, right? Because with the VA loan, you have to intend to occupy as your primary residence, and you have to occupy within 60 days of closing. This is the requirement for the VA loan. So if you're going to build a multifamily and you intend to occupy as your primary residence, and you can occupy within 60 days or a reasonable period of time, then you can live in 1 unit and rent out the other 3 units or 2 units or 1 unit, depending on whether it's a duplex, triplex, or 4-plex. If you do this, yes, we can use the rental income from those other units to help you qualify for the entire loan amount. And that's why it does sometimes make sense to go to a higher purchase price with a multifamily. Sometimes we have people that are like, I can't get pre-approved myself for a single family in these higher price markets. But if I flip my purchase to a multifamily, a 2, 3, or 4 unit property, all of a sudden I can get qualified because I'm now using rental income from each one of those other units to help qualify for the mortgage. So don't count yourself out. Don't rule out the option of doing a multifamily purchase just because you didn't qualify for a single family or because you're nervous you won't qualify. We can use that income coming in. Even if it's a brand new building and you don't have rents coming in yet, we're going to use projected rents to help qualify you. Now, if you don't have landlord experience, you are required to use a property management company to help you manage that rental property, which is typically a 10%. Like usually you can find a property management company that will manage your property for 10% of the rent per month. However, if you look at that, you get to write off that 10%. You get to include that in your tax return. When you have rental income properties, you're going to go and you're going to meet with an accountant, and they're going to file a Schedule E, and you're going to have additional write-offs that you can write off. You also have depreciation when it comes to rental properties, and that's going to help you. It's a very big advantage of having multifamily or rental properties, investment properties, because it lowers your taxable income. The goal for you guys is to have enough of these multifamily, enough, you might hear people talk to it as doors, enough doors to where you eventually don't have to work anymore, military millionaire, and you're just managing your rental properties and you're leveraging borrowing from one rental property to buy another rental property. And you're building your real estate wealth. You're building your portfolio, because there's a lot of people that will never buy out of fear. They're never going to buy because they're afraid of buying, or they don't credit qualify, or they don't have the income requirements. I have a friend that bought a whole block in Flint, Michigan, and he was renting out that entire block to Section 8 housing, but it cash flowed and it was a really good investment. I have another friend that bought a old church that turned that into apartments in somewhere in New York. So there's a lot of different options. You could have the multifamily options, and then eventually you can build into having apartment complexes and larger multifamily properties. You can also build into vacation rentals and Airbnbs, which I personally use. I have Airbnbs or vacation rentals. I started with it as an Airbnb that I managed myself. And then I moved it into, I did a 1031 exchange. I sold that property, and to avoid having to pay capital gains, I did a 1031 exchange, took all proceeds from the sale of that property, rolled it into another vacation rental purchase, and that property has done very well. I bought in the right market at the right time and had great appreciation, not only in value, but I only have to rent that house out. I think we calculated it's like 6 months out of the year, and it pays the mortgage for the entire year. So vacation rentals are a really good option long term. I have an employee that I was just talking to today. who's a veteran, who's never used his VA loan before, and we're talking about multifamily, and we're talking about the 4-unit VA one-time close. We've got a builder coming into the office tomorrow here local in the Destin area, and we're going to talk about what that looks like. So if you're in the Destin or Fort Walton Beach area and you're interested in a multi-unit, let us know, because we are going to be meeting with some builders. We're going to be looking at what does it cost to build some of these projects and helping our veterans be able to purchase them and buy them maybe already built or working on the build project. When you do that, it's just a really good way to start. And if you can't, for some reason, go multifamily, if you're in a market where there's just no multifamily available and there's no land available, you can also look at purchasing a larger house that has a lot of rooms. And if you're active duty, you can rent those rooms by room. You know, we have a lot of people in Fayetteville. We have a lot of people in California where it's very expensive. Housing is very expensive. And the way that you can hedge against expensive housing and inflated housing costs is you can turn homes into rental properties. You can rent them room by room. Is it without problems? No. Anytime you want to make money, there's going to be risk involved. Anytime you're going to make money, there's going to be work involved. I think that's part of the problem with a lot of people is they just want to make the money, but they don't want to do the work. Well, that's not how life works, right? If you want to build an inventory, if you want to build your own portfolio of financial wealth, portfolio of real estate investments, it's going to take work and it's going to take a little bit of risk. And you just have to make sure it's an educated risk, right? You have to make sure that you're looking at it and you're trying to mitigate any major issues that you could have. You're trying to mitigate risk. Having property managers screen your tenants, having them take deposits, making sure they're calling references, those things mitigate your risk. They lower your level of risk for loss. So there's a lot of things that you can do when you're looking at multifamily to make sure that you're a little safer. With multifamily, you will be required to have reserves. So this is another really important tip. The VA does not want to put you in a situation where you have multiple rentals and you're relying on those rentals to pay your mortgage. Because if those rentals go vacant for any extended period of time and you don't have money in the bank to make the mortgage payment, you could find yourself in a financial hardship. And we don't want to find you in a financial hardship. So the VA does require that if you're doing a multifamily that you have 6 months reserves in the bank, meaning money that you can access if you need it. TSP does qualify for a reserve requirement. So does your CD, your checking account, your savings account, your stocks, other things. Now, we might take 60% value in your retirement. We might reduce it for calculating your reserve requirement because if you take money out of retirement early, you get penalized, right? So there's some stipulations there, but you can absolutely use those funds for your retirement to go towards, or your banking accounts to go towards your reserve requirement. So that's just something to keep in mind. Again, property management will be required if you do not have landlord experience. If you have landlord experience, you'll be able to manage your own rental properties, and we can still use that income to offset. If you're not using the income to offset and you don't have landlord experience, you are not required to use a property management company. It's only when we're using income to qualify on those multifamily units. Okay, so we kind of went into the multifamily. I went down a rabbit hole on that. What questions do we have? Haley, you want to throw some questions at me from what you're seeing? You have to intend to occupy for 1 year. You must make 6 mortgage payments, 210 days before you refinance. Yeah, you can refinance these, and that's another nice thing. You know, the interest rates are slightly higher on the VA one-time close. However, you have the ability to refinance your VA mortgage into another VA mortgage if rates drop. And hopefully, as inflation comes down, interest rates will continue to come down. As rates drop, you will be able to, after 210 days, do what's called a VA interest rate reduction refinance loan. And if you're working with us, VLG, we are lending nationwide. We are not quite approved in all 50 states, but we are adding states every single week. This week we got Georgia. Thank God. We've submitted for Georgia weeks ago. And it's listed in the comments. You can see the states that we are approved in. And I'll go through them really quickly. Alaska, Arkansas, Arizona, Alabama, hold on, they're moving, Colorado, Connecticut, Delaware, DC, Florida, Georgia, Idaho, Illinois, Iowa, Kansas, Kentucky, Michigan, I feel like I'm back in school, Mississippi, Missouri, Montana, Nebraska, North Carolina, North Dakota, Oklahoma. Hold on. Somebody trying to join the live. I gotta decline it. Where did I leave off? Oklahoma, Oregon, Pennsylvania, South Dakota, South Carolina, Tennessee, Texas, Virginia, and Washington. California, we should have you any day now. So if you're interested in California, we'll let you know as soon as we got that approval. Indiana, Ohio, we're working on those. New York's going to be a ways out because New York is they like to make things a little bit more difficult. But we do have lending partners in the industry that we can connect you to that are licensed in a lot of these states. Yes. Question.
Can you work with container homes?
Oh, container homes are an interesting question. I don't know if we're doing container homes yet. I don't know if the VA, here's the issue with VA or any loan program and investor when it comes to unique property types. And I'm talking unique property types are not single family homes. Those are normal, not unique. So unique would be like a log cabin or a geodesic dome or a barn dominium. I wouldn't necessarily consider it unique, but it does depend on the construction structure and the way the building is being designed, because you can have what a lot of people call a barn dominium and it's just a stick-built house with a big shop in it. You could also have a barn dominium that is like metal siding and post and beam type of construction. And it's going to depend on the local housing authority and how that's considered. So we need to look at the plans and specs on it. But barn dominiums are allowed on VA financing. Manufactured homes are allowed. Modular homes are allowed. So when it comes to container homes, I think that we haven't closed one yet. I will say that much. The VA does not have a specific requirement on it. We have not brought that to our investor yet, but I know the biggest concern and the biggest issue is going to be comparable sales for a container home because it's hard to find comparable sales. However, I have seen some of these container homes that they're building and they are beautiful. They're amazing. They do not look like a container home just because it's a metal box, right? It's like kind of similar to like a manufactured home built in a factory. As long as they're meeting code, I would be willing to go to bat on that and go to the VA and go to our construction team and see if we can't get that approved. So I'm not going to say yes, but I'm also not saying no. Log homes can be done, but you also have to be able to find comparable sales. So I think the theme here is that you have to be able to find comparable sales for the appraisal, because the appraiser is going to they're going to need something that's similar in construction type, similar in design, similar in, comparable sales value, because that's how they determine value for an appraisal for any loan program, conventional, VA, FHA, USDA. It's based on what home sales have occurred in the last 6 to 12 months in the general area. So if there's no container homes there, there's no log homes, whatever it is, whatever specific type of construction you're trying to use, there's got to be some comparable sales. With regards to the barn dominiums, let me just cover real quickly. You have to make sure that the shop is not bigger than the square footage of the actual home. So if you built a 2,000 square foot shop and the home is 900 square feet, that's not going to work. But if that's flip-flopped and the home's 200,000, not 200,000, if the home's 2,000 square feet and the shop is 900 square feet, then you're good to go. So that's one requirement on barn dominiums. The other requirement is that you cannot be housing a commercial business from the building. So VA is not meant for commercial financing, right? So you can't have like let's say like a mechanic shop that you're housing from that with a big sign out front and it's commercial property. That's not going to fly for VA financing. But barn dominiums, there is some flexibility there, and a lot of it is dependent upon what exactly you're building and how it's structured. So yes, VA does allow that, and so do we. Land, build, multi, Texas. Yes. Round glasses, 1884. I like it. All those things. Land, build, multi, Texas. Let's do it. And in Texas, yeah, you can freaking do that. And you can do it very affordably. And, obviously we're lending a lot in Texas right now. What other questions do we have?
How easy is it to get a builder for VA loans if you intend to build?
How easy is it to get a builder for VA loans if you intend to build? Okay, let's cover that. If you yourself want to build, there is no owner-builder option for VA financing right now. The VA wants you to use a general contractor of record, and they do have to have some building experience, some recent building experience. And that's a CYA for you guys. That's to make sure that we don't get you connected to a builder. I have a client who's become a friend of mine. Actually, he's not a client. He's actually a friend. We want him to be a client because we want to bail him out of this situation that he's in. He is an amazing guy. He's actually over in the Ukraine right now removing mines and has been for the last year. He's been heading over there on his own dime, volunteering to remove mines because that's what he did in the military. And I actually just heard from him this morning, and he said it's insane the amount of mines. They haven't even made a dent in it. And he's been over there almost consistently for a year. So anyhow, he was building in Florida. He was not using the VA loan. He was using a 2-time construction loan. So he's stuck in this loan right now with the bank. That was a construction loan. That was interest only and based on prime plus a margin, because that is how those interim construction loans are structured, which means that his rate probably has shot up to over 7, 8, I would say 8 to 9% right now, because it's based off of prime rate plus a margin. His builder died from COVID, and I feel really bad about that, but he royally effed up the project before he passed away. The guy has had every single possible problem that you can think of. They weren't able to finish their home. This house has been in process of being built for 3 years, and the guy is stuck with this unfinished house, a builder who passed away, trying to get the money to finish the project. The bank can't force the construction company to finish it because there's nobody running the construction company. I think like the spouse took it over and she does not know what she's doing. And this poor guy. So there is some risk in doing these custom construction loans. You do want to look for maybe somebody who's got a longer track record, someone who has a lot of really good references. And these are part of the process that we're going to go through to approve your builder. So is it super difficult to approve a builder? No, but the builder has to be like a real builder and not just like Joe handyman down the road who wants to throw together a house and make a bunch of money off of it. He has to be legit, or she, Bob or Barbara, the builder, has to be legit. So we are going to put them through the process of getting them approved, but that really is a CYA to cover your guys' ass, to make sure that you don't lose your money, to make sure that the construction project gets completed on time. They build it the way they're supposed to build it. The quality of construction is there. You've got good references. You can call people, and I would highly suggest call people that these people have built homes for. Ask them a year later, 2 years later, 5 years later, are you happy with your home? Because you can weed out a lot of problems just by following up to find out what are their clients' experiences like. Okay, so VA one-time close, custom construction. We're licensed in a bunch of states across the country. We're adding more states all the time. If you don't see your state on there, we're likely in process for your state, and we are happy to get you connected with someone. If you're ready to move forward now, we're happy to get you connected with someone who is licensed in that state. Do we offer mentorship? Well, I would need to know what kind of mentorship you're talking about. So our staff is 65% prior service or spouses. We do hire veterans and active duty military spouses. This has been a part of our culture for the last 10 years. We hire military spouses, we hire active duty veterans, and we teach you guys how to become VA home loan specialists. We are also looking for more very seasoned or experienced realtors who really truly care about our military families. So realtors who are military spouses, realtors who are prior service, or realtors who are very just concerned about our military community and want to take care of our military community. We are looking for real estate agents to partner with all across the country because we lend all around the country. But yes, we will mentor. We will bring people on. We've had a lot of people become very successful that had zero mortgage lending experience, and we've taught them to become VA specialists, and they've gone on to have very successful careers based on our mentorship and our training and our platform and our program. Because we are not a bank. We are very military centric. It's 90% of the loans that we close are VA loans. Last year, I think we closed like 1,500 loans, VA loans. The year before it was like 2,200 VA loans. So this is what we do all day, every day. And we're very passionate about it. We want to make sure our military community is taken care of. And that is born as a result of being military families, going through the processes and seeing what it's like. And then having a lot of military clients that have been given super wrong information, having them get screwed over. And yeah, like the story I told you a little while ago about that one big call center that's a VA specialty company. that wasn't taking care of her and she wasn't getting the information or the answers she needed. She felt like she wasn't being guided through the process. Like, that's real, right? Especially when you're PCSing and things are stressful. You're going to a new duty station. You've got all kinds of things going on, or you're transitioning out of the military. You're trying to find your permanent employment. The VA loan program is unique, and you need to be working with teams that specialize in this loan program. That means 90% of the loans they're closing are VA loans, not 10% of the loans they're closing are VA loans. That shit won't fly. They need to be in the loan program more, and they need to understand more about the VA loans, because there's a lot of misinformation in people that just dabble in VA loans. Do we have a position that you can work from home? Our loan originators would be the most flexible position to be able to work from home and the field. Loan originators are all about, loan officers. You have to be out. You have to hustle. This is not an easy job. People think this is an easy job. It's really not. There's a lot of technical information. I typically like to try and scare people out of this career because it's a tough career. But when you apply yourself, if you use our system and you use our process and you follow our direction, that's when people are super successful. When people come in and they don't follow the system and they don't follow the process, that's where we see a lot of challenges. Now, real estate agents, if you want to become a real estate agent, a VA specialty real estate agent, we are rolling out a program for that as well, with education and training and mentorship. If you're interested in that, that is more of a work from home. But as you know, real estate agents don't really work from home all the time, right? Because they have to go out and they have to show properties. They have to go meet with clients. They have to do listing presentations. So you have to go to the house. You have to stage homes. You have to take pictures of homes. You have to do open houses and things like that. So I would say work from home is like a loose term, because none of us actually work from home. The busier you are, you get pushed back into the office because you're slinging loans all day long and you're shredding, taking care of clients on the phone nonstop. And just beware, loan officer job, like, you're on the phone all day, every day, 7 days a week. That's what you're doing. There's great opportunity to make great money, but you're on the phone nonstop. So yes, we're happy to talk to you, answer more questions on that. Reach out to our team. If you click the link in my bio, you'll see all kinds of ways to connect. Click the link in my bio. There's careers at VLG. There's get pre-approved. There's information about education. We do travel the country and teach education. We have a team on our team called the Veterans Resource Team, VRT. They actually have their own TikTok page. They are a group of retired E9s that are out educating and bringing this information all across the country to military bases. They're doing briefings. They're working with TAPS. They're working with veteran service organizations. We're helping with disability claims. We're helping with VA home loan education. Anything that we can do to spread the word out there, we are working on that. We actually have a branch in St. Roberts that is an office there. So we do have a location in St. Roberts. So if you're interested in talking to that location, actually, unless that was my girl in St. Roberts, we do have an office there. So if you're interested in meeting up with that team, we'd love to get you connected. What other questions do we have? Did I miss anything? Information and certificate of eligibility. What did that say? Oh, yeah, we do. I own land in Texas. I have blueprints, and we are ready to get started. Wife and I are both veterans. Sweet. So if you want to get started, if you're actually ready and you're like, hey, I want to get pre-approved. And again, getting pre-approved doesn't cost you any money. We pull your credit. If you don't move forward and you don't close on the loan, we pay for your credit report. So we're not gonna charge you anything to get pre-approved. So you just go online, fill out the application. There's a link in bio. So click the link in the bio, and then you can go in and you can complete that loan application online, and our team will get back in touch with you as soon as we have worked up your file. Now, just remember, after these live events, we get hammered with new loan applications and new leads coming in. So please be patient with us. There's a handful of us, but we are only so many people, and we are going to get back to you as soon as possible. You can also text, you can email, you can, however you want to get a hold of us, click the link in bio, you can DM us, whatever you need, so we can answer your questions, because usually people have a lot of questions and you just want to talk through like your particular scenario. I've got a divorce. I have my VA loan is, connected or used up. My phone is getting low. I don't know how it's getting low because it's plugged in, but what other questions? Let's see here. Apparently I don't know how to scroll. Can you buy land that is cash or conventional with your VA loan? Can you buy land that is cash? Yes. Good question. So if the listing agent has the land listed as cash only, cash out or conventional financing, it's because they don't know about the VA one-time close. So this again is where it's really important to have a real estate agent that knows this program. And we are out there educating real estate agents also because they don't know about this program. Real estate agents only know as much as they're given by the lenders that they work with. So if we need to go out and educate a real estate agent, we are happy to do that. And then they're actually more qualified to go write a contract for you and negotiate the offer. So what they're going to do is if I'm a buyer's agent and I see a listing that my client wants and it says conventional or cash only, I'm going to call the listing agent and I'm going to say, hey, I've got a client. He's interested in your property. They're using VA one-time close. This is good as conventional financing. It's exactly the same. Doesn't change to your buyer, to your seller. It doesn't change the cash to the seller. So that's the conversation that needs to happen. And here's why. I'm going to educate the listing agent. I'm going to help them understand why my buyer's offer is just as good as a cash offer or conventional offer. We're going to get under contract. We're going to do a feasibility study. I'm going to get you pre-approved. My client's already pre-approved. And we're going to close on time. And here's why. So this is why the realtors are really important. If you want to do this without a real estate agent, we do have some people that want to do this. Now, the construction itself, you don't have to involve a real estate agent with the construction project. This is just the land purchase. And here's the thing. If that land is listed with a real estate agent, if you don't use your own real estate agent, that agent that is listing the land is typically making double commission on the transaction. So if you have your own real estate agent who's representing you, then that real estate agent's commission that's representing you is being paid by the seller. Because as a veteran buyer, you are not allowed to pay your own real estate commission. Okay. So if you're saying that you don't want to use a real estate agent, then legit, you need to find a property that's not listed with a real estate agent. Because even if you don't have your own agent, but you're buying something that's listed with a real estate agent, you're in theory using a real estate agent because that agent is now acting as a dual agent representing you and the seller on the transaction. What's the process to build a duplex with a VA construction loan if you plan to live in one unit? Same process as it is on a single family home. So you're going to get pre-approved. You're going to find a builder. You're going to get some plans for a duplex. You're going to go find the land. Then we're going to order the appraisal. We're going to get a contract with you and the builder. We're going to get all of that stuff put together and submit that package in for an actual loan approval, a written loan approval, not a pre-approval. Difference between a pre-approval and a written loan approval is that pre-approval is done up front by your loan officer team. The loan approval is underwritten and taken care of by an actual underwriter with the lender. So with the investor, excuse me. So the investor is going to issue a loan approval. I don't know if we're going to get cut off in 3 minutes. So just a heads up, we might get cut off in 3 minutes because we did set this up for a 1 hour time frame for this live to go. So if we don't answer all your questions, we will get back in touch with you. The seller pays the buyer's agent. Let the realtor represent you 100%. I've been a real estate agent, you guys. Good real estate agents are priceless. I think the problem is there's a lot of real estate agents out there that don't necessarily create a good reputation for all real estate agents. But the ones that are good are really freaking good, and they're going to protect you, and they're going to take care of problems for you, and they're going to take things off your plate, and they're going to do research, and they're going to do due diligence for you, and they're going to make this process easier, and they should be negotiating for you to get a better deal. That's a good real estate agent, someone who gets you a better deal. You save money there. The seller's paying the real estate agent's commission, and I'm just not saying that all real estate agents are the same, just like not all lenders are the same. VA lenders that specialize in VA lending, and I've done that for 20 years, are not the same as the mortgage broker that can give you the best rate, or the bank down the road, or the credit union that specializes in VA financing, because I bank with that credit union that specializes in VA financing, and they don't have this program, and they don't have a lot of programs. So, and the insurance company that specializes in working with military families, I also have my insurance with them. So there's a lot of different things that you have to take into consideration when you're using your VA benefit and you want to be protected. Looking in Nampa, Idaho, we are licensed in Idaho, and we're happy to help you there. We are licensed in Idaho. My husband may be PCSing soon. If we get a home, will the 1 year standard be an issue to refinance? So you can refinance after you've had the VA loan for 210 days. The government passed a law because there were mortgage companies that were churning and just sitting back and refinancing veterans over and over and over again and really screwing them over. They were putting you in maybe lower interest rates, but they were adding thousands of dollars and sometimes $20,000 to a mortgage just to refinance you when it wasn't looking out for your best interest. So the VA passed a rule. And it says that you cannot refinance a VA loan until after 210 days from the note rate, and you have to have made 6 mortgage payments. And the reason for that is they want to make sure that the veterans aren't being screwed over. So we have to wait that long. I'm sitting in my house. Whoop. That VLG helped me get. Oh, that's awesome. Help me get into. Can't say enough good things about them. Thank you. That's so freaking cool. I love seeing it. This TikTok, it's amazing to be able to have a platform to be able to get this information out to you guys. This has been a game changer for us. Honestly, we just have always wanted to get the information out there. We've been teaching VA home loan boot camps and education all across the country for 8 years consistently now. So if your unit needs this information, if you're in command or leadership, or you just have friends that need this information, share our info. We'd love to do, even if it's not on TikTok, because a lot of veteran community and military community isn't allowed to be on TikTok. The active duty community is told don't be on TikTok. We are on Instagram. We're on YouTube. That's why we did this on YouTube as well, because that seems to be a little bit more agnostic. And, hopefully TikTok will stick around and they won't ban it, but we wanted to be prepared in the event that they do something stupid like that. I read that with VA construction loan, you'll need to hire a VA approved contractor. We talked about that. Any other questions?
Mods are doing a good job.
South Carolina, yes, we're licensed in South Carolina. Yes, we're licensed in Missouri. Yes, we're licensed in Florida. Louisiana, there is one regulator that works for the state of Louisiana. One, literally. We've talked to her a lot, and we're waiting on Louisiana. We should have that soon, but we also said we should have that soon last week and the week before. So currently we're not licensed in Louisiana, but we will be very soon. St. Roberts, New Mexico, we're working on. We're not licensed in New Mexico. I think that's about it. We can get more specific with you on your own individual scenario. So reach out to the team. Again, click the link in bio, send us a direct message, or you can flip over to the Instagram and message us through Instagram. Whatever works for you. We're here for you guys. Thank you for attending the TikTok live. And follow my page. Obviously, you probably already do if you're on this TikTok. Otherwise, if not, follow it. And we'll make sure we get you live updated information about the VA home loan benefit, buying homes, becoming a military millionaire. We're going to do another class on investment properties, converting your home into an investment property using your VA loan. And then long-term, what kinds of things you need to look out for to be an investor. So thanks so much. Have a good night.